Ladies and gentlemen, good afternoon, and thank you for taking the time to be with us today. My name is Prasanjit Chakraborty, and I'm a partner in Ketan's M&A and Corporate Practice Group. On behalf of the firm, I would like to extend to each of you a very warm welcome to this webinar, whether you are in our audience here in India or abroad. On behalf of the firm, I would like to extend uh, really a lot of thanks and compliments uh, for your constant support over the past so many years to this webinar program. This is the first webinar in our M&A Master Series in 2024. We have an excellent program this year based on feedback from participants to the series in previous years, and are thrilled with a very positive response to this year's M&A Master Series. We are very grateful for the interest and support which our clients, associates, and others have shown. We look forward to your participation and in this M&A Master Series 2024. On this slide, as you can see, is the agenda. The agenda really is that we will have a panel discussion with our expert panel, followed by a Q&A session with audience questions. We have already received several audience questions in advance. And of course, if you do have any audience questions, please submit them using the facility provided in the webinar portal. If we cannot cover all the questions during the webinar, we will respond offline by email separately. Also, please note that after the webinar, you will receive the slide deck on your screen, the summary notes or the key summary of what will be discussed today, and a recording of this webinar also. Now, without much ado, first introduce the topic to you. And before I introduce the panelists in brief. So, as you can see, the title today is Indian M&A Review in 2023. While of course, we are taking a look at the year gone by, and past may not necessarily be a predictor of the future, but an analysis and examination of the past can offer some very valuable insights, provide some useful lessons, and frame the groundwork for the future, which is 2024. Broadly, just to set the context, after a whirlwind record-breaking 2022 in M&A space, despite challenges in the global economy and other headwinds in 2023, including high interest rate, macroeconomic uncertainty, rising regulatory scrutiny, political pressures, valuation gap, etc., Indian M&A market was not stymied, and it maintained strong momentum even in 2023, driven by structural growth, favorable policies, and a plethora of other factors which we will dive into in today's webinar. And Indian M&A sector and space has just not survived, but really reveled and thrived with remarkable resilience. In this webinar, we will explore a variety of things, including the surge in mid-market transaction, strategic acquisitions by conglomerates, innovative engine 2 investments that propelled the market forward, bullish sentiments among deal makers, sophisticated strategies employed, and the sectors that saw the most action. In short, in this webinar, we will unpack the key elements that shaped the Indian M&A landscape in 2023. Now let's turn our focus to the all-important panel, the panel who will really talk about all these aspects. On the screen, you can see Mr. Amit Thawani. He's the Managing Director and Head of Indian Investment Banking, Nomura. On my left hand of the screen is Mr. Mayank Rastogi, very senior deal maker and partner in EY. And we have Ms. Nisha Poddar, who is a well-known television anchor, market anchor, editor, M&A CNBC TV, well-known face in the business world. And we are really, really privileged to have all of these three expert panelists here. We have already emailed their credentials separately to each of you who have registered for this webinar. So I will not waste much time repeating or summarizing their experience. Suffice to say that I'm really privileged to have such experts to talk about this topic today, and they have excellent credentials, best in the business, so to speak. Project, yeah, slides are off, so I think let's now dive into it. I think if I may start with the first question, really to kick things off, and how did the Indian M&A market fare in 2023 relative to other markets? If I may request, Amit, maybe you go first, and maybe Mayank, you can supplement on this question.
Great. Thanks, Prasanjit. Thanks for having me on this webinar. So I think if you look at the Indian M&A market over the last 4-5 years, 2022 was an outlier in more than one. Partly driven by the fact that you had a very large M&A of HDFC Bank, which was announced in that. When you look at 2023, in line with global trends to an extent, although India still continues to be an active market. Globally, M&A has been down about 15% to kind of close to $3.2 trillion. In India, M&A, excluding HDFC Bank deal, because as I said, that was a very large outlier deal. M&A was about $80 billion, which is about 20% down compared to the previous year. So in that sense, comparison, India is kind of in line with global comparison. Having said that, I think an important part to highlight is that the M&A market in Asia was much more significantly impacted, simply because China, which is a large piece of the market, was not very active. So to that extent, India actually stands out within Asia as a market where M&A activity is still sort of reasonably robust. And I think the challenge in terms of M&A this year was not to do with sort of quality of underlying deals or lack of deal flow. It's largely to do with the fact that the valuations were running because Indian stock markets have been running very fast. There has been a bit of a challenge to sort of get the bid ask in the right zip code for some of the transactions, but I'm pretty sure some of those transactions are still under work, and some of them will start seeing conclusion very soon. So you have a scenario where globally there has been some amount of doom and gloom, other than the US, of course. But in India, it was more to do with stock markets running ahead of time a little bit, which has impacted M&A closure.
Excellent. Thanks, Amit. Mike, you want to chime in and supplement to Amit's comment?
Yeah, no, Amit's really covered it well. I think, like he said, right, with the stock markets on fire last 12, 18 months, or more importantly, the capital markets on fire, right? A lot of IPO activity. We just saw M&A, the bid-ask spread that Amit spoke about, sellers in private markets also expecting the same valuations as the capital markets, and buyers were just not willing to pay that. So that led to a lot of angst in deal making. But I think we're starting to see some level of green shoots now. I mean, especially towards the end of fourth quarter, beginning of this year, we are starting to see capital markets in some shape or form behaving better. There is some cooling down that's happening. So that essentially, I mean, to us, it was a story of two halves. First half, very strong M&A scene. Second half, not as much. And towards the second half, I think, like I said, right, we are starting to see pipeline develop better. The one more aspect I'd mention, Prasanjit, is that I mean, big part of Indian M&A scene is the private equity role, right? Technology as one sector which has been historically very large was practically absent in deal making. So that also led to some sort of cooling down overall. But again, I mean, we are starting to see some activity there now. We expect a lot more transactions to come to to the market over the next 12 months as PE funds look at their own portfolio and sort of portfolio churn. I mean, reasonable year. India's done similar or slightly better than the peers, but very hopeful of what 2024 has in store for us.
Right. I think that's the beauty of M&A. Tech. Everybody would have thought is a sector to look out for in 2023, and it was kind of subdued against expectations. I think now, having set the context, I think the next question is about what deals. So I would say, what are the marquee deals of M&A deals in 2023 in the Indian context? And if I can invite all the three panelists, maybe start off with you, Nisha, bring you into this, and then followed by Amit and Mayank to supplement.
Thank you so much, Prasanjit, and hi and warm welcome to everybody. Now, yes, so the key theme for the last year has been that the M&A side was a little muted, while the equity, exits by the private equity on the stock exchanges was one of the best we have ever seen. It was a record year for that. $15 billion worth of equity exchange hands, and that was the amount of exit that private equity made. Coforge was a large transaction where EQT exited, and it gives a lot of confidence to the other private equity players that Indian market gives potential for a complete exit as well. Having said that, I would just make one point before I go to the main deals that still happened. Still, M&A was thriving, and a lot of them have carried forward to this particular year. I would say that 2023 was marked more by deals undone than the deals done, and I'll explain that. Zee Sony deal had been going on for 2 years. Finally, it has been called off. So that was one deal that we were all expecting that would have been done last year. Deal undone. Another story that I had broken on Cipla stake sale, that would have been one of the largest transactions, and that went into cold storage. So that was the theme. But in terms of some of the marquee deals, I would say that healthcare space has been buzzing, and in fact across the board we have seen some meaningful transactions take place, especially in the financial services sector, which has always been active and continues to be active this year. So healthcare, financial services, these are the two areas, and tech-based, even though startup ecosystem was pressured because of the liquidity constraints and the valuations coming down. Well, still there were some transactions that took place, but one that really was eye-catching was Titan's acquisition of Carrot Lane. Now, this is a bigger theme of omni-channel. There was a transaction a few years back of Thyrocare being acquired by PharmEasy, and that was a big transaction which actually showcased the omni-channel approach, where the new age companies along with the old brick and mortar companies coming together, collaborating to really make a big behemoth. And the acquisition is all about growing with partnership. So that is one theme that carried forward in 23, and I think this acquisition was a big one. AU Small Finance Bank that acquired Small Finance Bank. So that was a marquee deal. So Raksha Realty, JP Infratech deal, and also from the healthcare space, Nirma buying up Glenmark Life Sciences. So these were some of the marquee deals which catch my attention from 2023. But compared to last many years, it had been a muted year for M&A.
Excellent. So that was a very insightful comment, Nisha, and some of the marquee deals touched upon. Amit, your list of marquee deals which you.
I think the deals, I think Nisha has covered quite a few of the important deals in terms of healthcare. Financials, frankly, have largely one was HDFC Credila, which frankly closes now, but it was announced today. Of course, AU Small Finance Bank merger. What also can be thought of as a thematic, typically happens in a kind of muted year, is also that you had some of the group, solid group mergers. So, you had the IDFC First merger, you had the GMR Infrastructure Limited and the GAL in-house merger. So those were some of the internal group level or kind of holding company level internal transactions. I think one or two areas which maybe Nisha didn't cover were around renewables. So you saw some large transactions like Brookfield investing about $1 billion in Avada as one of those transactions which is large. There was the transactions where effectively CPIB and renewables in the Renew Power increased their stake, so that they were already in the company and they got bought more stake from Gold. GIC partnered, for a $1.8 billion green ammonia project. So there are deals in asset-heavy real asset sector which didn't happen last year, but they were far in. Historically, renewables was a very active space. Now, let me tell you, there are at least half a dozen deals in the market on renewables currently, which have been there for the last 6, 9, 12 months, haven't concluded. So it goes back to the fact that somewhere valuation matches. And somewhere also what we've not spoken of so far is also the cost of financing. I think the cost of financing is still kind of reasonably elevated. We are a large provider of acquisition financing in the country, and I can tell you, especially the private equity fund, there's still it's not an easy environment in terms of cost of capital when you're looking at large buyouts. On one end, you have the stock market valuations which are high, and the other end you have the cost of capital which is high. So it becomes a double-edged sword for especially buyout fund in terms of making deals.
Right.
Sorry, the only thing I'll supplement, I think both Nisha and Amit have covered it quite holistically, but I think the only other thing that at least we saw was this whole push that the government has had on digital infra. We're now starting to see some massive transactions in digital infra. So people sort of buying into last mile connectivity into homes, enterprises, people buying into these large data centers and so on. And you are starting to see deals in hundreds of millions of dollars, maybe one or two crossing $1 billion as well. So that's just the other theme that we are picking up. Both private equity investors and global strats are starting to look at that area very, very closely. Similarly, some of the other emerging technologies, I mean, EV for one, you saw the JSW transaction, right? So that's, I think, larger corporates both in India and globally are now starting to transact in these sort of sectors in India. So you'll see more and more of these going forward. But we saw some early large transactions in this already in 23.
Right. So I hope that really gave the audience members a good peek at some of the large and big ticket market transactions. I think the next obvious question is which sectors. I think in passing, all three of our esteemed panelists have given some indication which sectors were thriving, but now specifically Nisha and then maybe Mayank and Amit can supplement which were the hottest sectors from the M&A standpoint, maybe three each, and maybe shed some light on that.
Right. So I've given some bit of clarity on that, but I think healthcare and financial services, these have been my top picks when it comes to the sector. And media has been so far a very sleepy sector. In the last couple of years, I would say that some large transactions have been done and or attempted. So media is one. We are still waiting for Disney Geo deal really to fructify, and we have seen PVR Inox transaction recently. But media is one space which is thriving, buzzing, and has seen a lot of activity. And healthcare, in that also, I would say the hospital space. There was a lot of action on M&A in the last year, and a lot of them have also spilled over to this particular year. So it really continues. Financial services, I won't attempt a guess. Amit is better positioned to say. But on the other hand, I would say that one of the big constraints for last year that a lot of deal makers shared with me is that the private and public market valuations, they were so different. There was such a big gap in the valuations that it was becoming very difficult to convert and close the transactions because the valuations were not really matching up. So the public market valuations were just so high, which the private market players were not getting, and they would always benchmark the valuations with the public.
Not
Yes,
only
Mayank.
were the valuations high, the valuation went up very fast. See, that's the big difference, right? Since August of last year, I think the way stock markets have gone up, it made sort of make deal making much tougher because it wasn't so elevated till August, September last year. But then the way the stock markets have been going on, I mean, it's very difficult to. We need some cooling off, and which I think is already happening. That's my answer. Sorry, Mike, it was supposed to be you.
No, I was only saying, Amit, that if I pick three sectors, there will be nothing left for you. There are only as many sectors that exist. But anyhow, on a serious note, I think one sector that again I think we're starting to see a lot of work happening, and you will see this in private capex cycles, is the entire industrials and auto. So we're seeing transactions happening, a lot of inbound interest. So a lot of global MNCs trying to set up or buy large production facilities in India. There is China plus one is starting to become a reality, right? So there was a lot of chatter maybe 2 years ago, 3 years ago, just coming out of COVID, but real money is starting to flow in. So Prasanjit, if you look at just deal volumes, and I don't talk of value yet, but if you look at deal volumes, then I mean both industrials, engineering, auto, those kind of sectors are starting to see interest both from large conglomerates in India and also sort of MNCs, like I mentioned. I mean, a lot of Japanese companies starting to look towards India, American majors looking at India. So that's one sort of trade flow that we should all remain pretty close to, because I think, I mean, if you maybe somewhere in your agenda you'll ask for outlook, but I mean, I remain personally very optimistic about this whole industrials auto going forward next 2 3 years. It should be the sector that one should watch for. Amit, anything you want to add?
No, I think it's all covered.
Right. I think moving on to the next question again, the three of you before we I think kind of zoom in more. I think this is key deals in these sectors. I can give him, Mayank rightly said, there are only a handful of sectors which did well. Maybe one deal each, Nisha, Amit, and Mayank can talk about in context of sectors which were buzzing.
Maybe I'll start
Nisha,
first and
okay, Mayank. Yeah.
yeah, no, healthcare, Nisha covered healthcare, but provider care, I mean, you saw a massive transaction in Manipal, right? So that was again a couple of $1 billion, big money came in. There was this big transaction in an IVF business called Indira IVF, right? So healthcare overall, and there are multiple other deals, right, in healthcare that happened. So that sector itself is sort of seen a rebirth. But there were times when you could take a transaction and people will turn it away. I mean, now you get confused between multiple of sales and multiples of EBITDA. That's the state that sector has come to, right? What we were selling in multiples of sales or multiple of EBITDA is now getting done at multiples of sales. So I mean, healthcare, like I covered a couple of them. Maybe Amit, Nisha, any other sector, any other deals you want to cover?
A couple of deals that I think we should talk about. I'm saying that only because both were large and therefore slightly different. One was HDFC Credila, the largest education finance business in the country, and courtesy the large bank merger, they were regulatorily required to sell it off. And it got sold at a fairly good sort of price, both for the seller and hopefully for the buyer as well. And it was an all-cash deal. Cannot get financed. So, the reason I'm highlighting it because, as I said, financing is sort of kind of expensive, but it doesn't deter, buyer funds to do all cash equity if the asset is performing well in both sector, etc. And at least on the face of it, the multiple is kind of fairly good for both. So it's a growth sector. The seller is happy with the multiple. The buyer is feeling good about buying it. So you still have the potential to stitch such deals. I'll take another example, completely other way around. Actually, is Hinduja Group buying Reliance Capital. This was an asset which was in works for the last 5 years. In sort of bankruptcy situation, etc. And it's quite heartening to see that after DHFL being sold to Piramal, this is the second financial services asset to actually get successfully concluded with a reasonable recovery. I think it's 35 or 37% recovery in terms of dues to the lenders. And it did see a competitiveness in the process. So you had Torrent and Hinduja fighting hard for the asset. And it went up all the way to Supreme Court because of whatever process reasons, and finally getting concluded. Why I'm highlighting this again is because historically, number of such deals and situations, especially when they end up in court, they never get settled. They just keep getting lingering on and on and on. And all three of us on this panel, I can tell you, would have seen deals through our careers which can just keep going on for a long period of time. I think it's worthwhile for your audience to know that in 3 or 6 months, they eventually the court cases and everything was sorted out, and that's a sign of a healthy, regulatory system. That's a sign of a healthy M&A market, and it's good to see, services kind of businesses also getting sold off through bankruptcy laws.
Right, Nisha.
Right.
Yeah.
So I would say, out of all the deals that I summarized, I still think healthcare has a lot of firepower, and the sponsors have the maximum, money right now, moolah right now, and they are very upbeat on the healthcare space. So one deal that stands out for me is Advent International's buyout of Suven Life Sciences, and I'd say that because it's a large transaction, $770 million. And it's not just acquiring the company, but Advent International also has international expertise in the pharma healthcare space, and they bring that expertise into the acquired portfolio company to scale them to another level. So they have got a platform with pharma healthcare companies. Now Suven Life Sciences is part of that platform. They are doing amalgamation and restructuring over there, and they are going to build that platform further to create an end-to-end solution in this particular space. So this is a kind of a bolt-on kind of an acquisition, also creating value and bringing in a lot of pieces together to create a larger company. So it's like real value creation with the might that a financial sponsor can really come in. So that's one space or one deal that stands out. But I would say that now private equity is finally talking about, as the other panelists said, the industrials space, automotive space. I do hear that all of them are now interested in manufacturing, infrastructure, and more in real estate, because one or two players have really shown that they could really exit well from real estate. We saw the Embassy transaction where Blackstone could exit their final tranche, and a large one at that, on the REIT platform, which is again a game changer for India as a country in terms of providing that exit opportunity. So now the private equities are looking at real estate as well. Infra, again, they are very upbeat, and this we are seeing after say 8-9 years. that infra is coming back in focus, and manufacturing also they are beginning to see, and these are the sectors which are capital intensive, which really require money, and that's where a lot of foreign investors are now looking at.
I'll give you a
Excellent.
perspective. I know it was covered, but I just say, on manufacturing, we're quite active in the industrial space, and frankly, the last 3 years were actually more of capital markets. So we did the largest industrial company IPO ever in this country, and then a number of other deals on the market side actually. And it's kind of picking up on the private side. Historically, these used to be strategic kind of deals, but it's getting more on the private capital providers. I'll also tell you the problem there. There's not enough supply available. So there are only few deals in that sense of size and stature in the industrial space where there's actionability. But it's a sector to watch out for.
Right. Right. So I think moving on as we enter into halfway mark of our webinar, I think the next question, if I can just lob it to Mayank and Amit, is what propelled and drove this M&A activity in 2023? Was it domestic investor? Was it foreign investor? Who had the upper hand? Was it even Stevens? If you can shed some light on this, that would be great.
So purely on statistics, I think 56% of the M&A volumes were cross-border, which includes buyout funds. Okay, and about 44 is domestic, which is frankly a great ratio. To have a ratio of 56-44 is a sign of a very healthy one. I mean, I can tell you a few years, this used to be like 80% international and 20% domestic. What is actually even more encouraging, and Nisha and I have had a year and a half back a show where we had discussed about it, that this is not only driven by the top 2-3 conglomerates in this country anymore. It used to be historically Tata, Reliance, and Adani who used to be the only acquirers amongst domestic strategics. But today, if you see, you've got mid-sized corporates, including names like Hinduja, GMR, Nirma, Burmans, who have done deals which are still in thousands of crores. So it's not very concentrated with a very small set of buyers of assets. So it's a reasonably healthy mix in terms of almost equal between international and domestic. It's reasonably well spread out, though some sectors stand out. Obviously, healthcare and some other sectors stand out in terms of deal activity. And within Indian groups also, it's now not so concentrated only on 2 or 3 groups, which used to be the case 5 years back.
Quite a startling statistic. Mayank, your take on this? I can't hear you, sorry.
Sorry, I was saying that Amit covered it well. The other way to cut this pie is also to look at sheer M&A and private equity. Now, again, very similar numbers as Amit mentioned. Cut back 5 years, M&A used to be 80% of deal value. Private equity used to be 20% of deal value. It was 90-10, maybe 10 years ago. So what is happening over time is private equity is significantly increasing, and now private equity is maybe 50% of deal value in India. I mean, what is also very interesting, Prasanjit, I mean, we keep on talking about these really bubbly capital markets, but do you know how much capital got raised in like the best of capital markets we've had in 23 or 22? I mean, overall capital that got raised was maybe 17, 18, 20 billion dollars. Private equity in 1 year in India invest or has been investing upwards of $50 billion, right? So the pools of capital are sort of deepening significantly. Going back to your original question, is it domestic or foreign? I mean, most of private equity money in India is foreign. So there are some, again, early signs of HNI starting to pull together or pool together money in India. Gift City is one initiative that the government's taken towards that to facilitate pooling in India, but still it's predominantly foreign money. Like Amit again said, right, M&A predominantly driven by domestic corporates, both large and mid. Uh, but we are now seeing, I mean, you will see some really large transactions happening on the inbound side, so cross-border inbound. Indians, I mean, again, roll back 10, 15 years, there were a bunch of outbound large transactions that Indians did. So Adani did that, Birlas did that, Reliance bought a lot of shale, and so on. But I think the growth opportunity in India is so large that conglomerates are also heavily focused now in India. They are, I mean, they'll buy an asset or two here or there, but I think most of their focus is to consolidate and again, I mean, what you saw Tata Consumer do, let's say with a couple of back-to-back transactions, right? They ended up spending almost close to $1 billion in acquiring Capital Foods and Organic India. So you will see Indian companies far more emphatic when M&A sort of springs up in India. So, I mean, similar sort of ratios, if you cut private equity and M&A, 55-45, private equity is significantly rising, and that's a deep pool of capital that's available now to Indian corporates.
Right, right. Thanks. That was very helpful. I think the next obvious question is, well, 56, very close ratio between domestic and foreign, but out of this entire M&A, what part of it constituted of private equity, stroke financial sponsor, and strategic investors? So maybe Nisha and Mayank can have a stab at it, shed some light on this statistics-driven question.
No, so Prasenjit, unfortunately, last year the M&A and strategic M&A, we've seen far and few. A largest bulk of transactions have really come in from the private equity. And I want to also point out, while we are talking about buying, a lot of exits and returns have been made by VC and PE. And especially in the new age companies, we have seen a lot of VCs really exit their position. Now, when we talk about the private equity, there are some very marquee deals. We spoke about HDFC Credit, which was the biggest one. EQT remains as one of the very big proponents of India right now, and they will do more large transactions, more buyout transactions going forward. Advent, we spoke about Suven Life. Apart from that, Brookfield, Blackstone, Temasek, all of them have really invested quite a bit on Indian assets, whether it's healthcare, financial services. These are the two main areas. And when we talk about the private equity investments and financial sponsor investments, we must not forget Reliance Retail, second round of fundraising, which gave them the $100 billion valuation. And some of those investors were coming in Reliance Retail for the second check. So it was after a few years gap that Reliance Retail again came to the market for an equity fundraise, and this got them over $100 billion of valuation. So that is one of the big fundraisers that really took place from financial sponsors, private equity.
No, sorry, like I said, right, private equity is broadly half and half now. As in, if you look at the overall M&A market or overall deals market, P is now more or less half. So, Prasenjit, I mean, just specific numbers. If we had, I mean, our census market was approximately 140, $150 billion in value. Of that, 60 odd came in from private equity, 80 odd was the M&A market. The classic M&A style deals, which are more buyouts, large buyouts. I mean, Nisha spoke about some of them. We are seeing some growth. I think over time, as exits become more tangible for private equity funds, I think there is greater interest in picking up larger and larger stakes. I mean, another data point: private equity funds are right now sitting globally on the highest record high levels of dry powder, right? So there is a great intent to pick up larger stakes, do larger deals, cut really large checks. And those would only come by in a country like India if they do buyouts. Unfortunately, minority stake deals would not cut the ice for them. So buyouts and generally the talent pools and their ability to run companies, ability to attract management, enough management talent, etc. Countries in that right spot. So you see a lot more buyouts, not as much as one would want to, but I think you're seeing that increasing trend now.
If I
Can
can
I
just
just intervene on that? If okay, just 1 minute. I was just looking at this particular scenario where the private equities have become very confident and they're very attracted towards India because they got a lot of buyout situations in the last 3 years. This year, advent of this year, just the confidence level so high in corporate India, I'm suddenly beginning to see that promoters want co-promotership first as a first step, and they want the private equity to take a minority stake, come bring value, and then they want to exit at a later stage. I know at least 3 transactions live right now which want co-promotership, and we have to see how many private equity firms are going to like that piece. Not everybody wants co-promotership. So therefore, this is one trend that I'm seeing picking up where it's becoming um, the company's market rather than the private equity market from this year, because the confidence is very high for next 5 to 10 years.
one other trend, Prasenjit, though not directly linked to your question, maybe worth highlighting here. A lot of exits that happened, which is in the M&A, or where seller is a private equity and a buyer is also private equity. You have a number of situations, for example, Kim's, which was seller was True North. You have, Goldman Sachs selling and CPPIB buying and Renew. You've got in Kim Hospital again, TPG a seller, Blackstone a buyer. You have a number of these kind of deals, or IBS software, Blackstone and X is the buyer. So you have a lot of deals which this is sponsor to sponsor kind of trade, and you will see that. You will see rotation of the hat, which is quite frankly also the way the more mature market has happened, where you will have one sponsor selling to another sponsor. As these asset sizes grow, different sponsors have different deal size requirements, etc. And that's something which is, again, as I said, a healthy sign of a market, that people are willing to buy into secondaries, do buyouts from other private equity funds. That's the trend which will continue.
Right. Very interesting perspectives. I think the next question actually, I think, is the more philosophical one. I mean, for the Indian M&A market, how important is the private equity investment? Is it as important as it has been historically in comparison to other worlds, or do you see a more of a private investment role, or you think strategic will have a larger say, as Nisha was alluding to? What's your take? Maybe Mayank, Amit, or can have a go at.
Private equity will be a very important pillar of M&A market, without a doubt. And private equity in different formats. I mean, growth capital, buyout, is where most of our time gets spent. Private equity, you cannot rule out. It is going to remain a large proportion at any point of time, at least for the foreseeable future. It's simple. When private equity is looking at allocations, I mean, I can tell you, we're parting to number of discussions. When you're looking at Asia, it's basically India and Japan. These are the two biggest markets that people want to deploy. And the proof of the pudding is So 4 of the largest buyer funds in this country, the Indian CEOs have become Asia CEOs. So, it kind of shows you the depth and the importance India has. And Japan, because it's a great revival story. So most private equity funds are, moving in, trying to find, action in Japan. So in Asia, the two most active and the most relevant private equity markets is India and Japan.
So like I was saying, Prasenjit, earlier, I mean, this year, despite really strong capital markets, overall money that got raised on capital markets was $6 billion, right? This is across some 220, 230 IPOs. Compare that to private equity transactions, about 1,000, 1,100 deals across stages of deals. I mean, buyouts, growth, venture capital, and so on. Money invested was $16 billion. So 10x then a market which was one of our strongest years ever on capital markets. So
No, man, that is not correct. The IPOs last year were very small IPOs. It was not a very large market. So it was not one of the best. What you have to look into is there was $20 billion of block activity. So if you look at it as an overall ECM market, then it was a large market, but it was substantially dominated by block last year. Close to $20 billion block, which in my career was the first year we achieved that size.
So I mean, even if we were to, sorry, why don't you complete?
Yeah, so the IPO market this year is likely to see larger. Last year was very small, all $100 million type of deal.
Yeah, no, the simple point I was making is even if that, right, the largest deal, largest IPO in India, I mean, $1 billion IPO, you have to really sweat it out to get it through in India. Versus private equity transactions where now some of the large funds that Amit was talking about will not battle an eyelid to do a $2-3 billion transaction, right? So that's the power of private equity in the market. The other way to think about this is that overall, the dry powder that's available with funds globally is circa $2 trillion, right? Very, very broadly, the allocations to India tend to be 3 to 5%, depending on the fund you're talking about, depending on their maturity, interest in India, and so on and so forth. It can be actually as much as 10% of their global pool. Now, just that, right, is about $100 billion waiting to be invested. So there is just so much capital that's following in, and with such strong teams that again Amit spoke about operating out of India, private equity is going to be a significant pillar of M&A.
Right. Right. I think the next obvious question is, well, it's established that private equity remains pivotal, but in terms of the investments in 2023, where did you see the bulk of the PE investment coming from domestic market, international market, specifically on the PE? If Amit and Nisha can go on this.
So you're saying going forward or for the last year?
Last year.
In the private equity space, you're saying?
Specifically private equity, yes.
But the bulk of it was international, right? Bulk of it was international.
Okay.
I mean, domestic private equity is still is a small proportion.
Yeah. Nisha? Different
Yes.
views?
So the Indian homegrown private equity, as much as we want them to grow further, and they are trying, and I'm sure in the next 5 to 10 years they'll be much bigger, but they are much smaller, and the names that stand out, multiples, Kedara, they are doing very well, and for some of the family offices have become big investors as well when it comes to private equity. But otherwise, VC as well as private equity overseas, and I agree with the other panelists who mentioned that the deployment is much bigger. See, most of the global private equity firms, even if we are going on talking, contribution to India, is less than 5% of their global allocation, right? More than $100 billion firms have a few, say, single-digit numbers of $1 billion of investments in India. So the headroom of growth is very high, and everybody is deploying more in India from now on, given the growth potential. And I would also like to mention that they all like certainty. They all like leadership certainty, and policy flip-flop is something that the investors don't like. And they, after the state elections, the overall understanding and the foreign investors' view is that India is stable in terms of governance, and the policy will see a continuation, and therefore they are going gung-ho about India investments. But again, I would say that equally gung-ho are companies now, and there will be huge amount of competition amongst the private equity players for the few assets which are available, as I foresee in the next few years.
Excellent. So moving on, I think the next question is specifically focusing on Indian corporates. I think, and this is to maybe Mayank, you can have a crack first, followed by Amit. Did Indian corporates become buyers rather than sellers in the M&A market in 2023?
So I'll again cut this into two. Look at conglomerates, large corporates, very active buyers, right? We spoke about Tata. You've seen Adani, you've seen Reliance on a roll when it came to consumer assets a few months ago. So they are all very large buyers, and they are very credible buyers. So earlier, Indian buyers would be, somewhat circumspect about paying value, but now they pay top value because there are a lot of strategic imperatives they have. So makes sense for them. The other half is the more mid-market in India. There are some buyers, but we at least see a lot of succession-related sales emerging in that segment. So a lot of people who, and this is what happened in the US in 60s and 70s, or in Europe in 90s. We are starting to see exactly that in India now. It's just the demography of the country, right? As businesses which have now matured, businesses which were set up in 80s, 90s, are now coming or needed to be passed on to the next generation. The next generation is standing up and saying, sorry, I can't be standing in a shed. I can't be doing this. I want to do something easier, right? And those deals are coming to the market as sales. So, like I said, right, it's a story of two parts. Very active buyers in the large cap. Practically every deal you will see them competing. But in the mid small cap, I think we are seeing a lot of sellers now. Lot of sellers, and it's just, nothing wrong with it. It's just how the evolution of M&A.
Right, Amit.
I think Mayank has covered. I think we in the past discussions also we said. I think it's an interesting evolving scenario. Themes and trends do change over time, but I think we are a market which is getting a lot of attention globally as well. So while so far, you're seeing private equity, etc., I won't be surprised all these M&A transactions start attracting a lot of international strategic investors.
Prasenjit, the only other thing I'll add is that people are also starting to get somewhat rational about their businesses. The emotions and businesses are starting to delineate. So if you today go to somebody and say, listen, I'll pay you cash flows that for next 20, 30, 40 years today, right? However much I may love that business, people are actually coming to the table and saying, okay, let's talk about it then, right? So yeah, you can look at buyers, sellers, and all of that. But if somebody comes along, if a large multinational comes along and tells a very large Indian company that, listen, I'll pay you 2x the market value today, I'm sure there are people who are happy to jump onto the table and say, okay, let's explore this more. So, and that's again the evolution of a country or our demography, that 20 years ago, go to a family and say, do you want to sell? and practically people like I and Amit will be banned from those buildings, right? If not cities. But today you can have those conversations without sort of worrying that will I be allowed again here. So that to me, I mean, I think M&A is becoming mainstream. Sorry, Amit.
Mayank is rightly saying, Mayank should mention the second generation. The second, third generation sometimes don't want to run the same business. That's creating some of this delay.
Right.
Founder's gone, a founder is old. The second or the third generation is saying, okay, it's okay if we get capitalize our value, why not?
Right. Right. Very, very interesting. I think as we now, kind of come towards the last segment, I think I will have one last question before I open it up and take some audience questions. Before having the 3 or 2 key takeaways each from our panelists before the poll in conclusion. Last question from my end would be on Indian corporates. Where really focused in 2023? What were the key focus areas of Indian corporates in MS? This, if I can throw it to Vinisha and
Sorry, Sanjit, I'm not clear of the question. Maybe the voice was not.
yeah, so focus of Indian corporates, I think some of which we have already touched upon, buying, selling sectors. What were they really focus on? Fundraising, divesting, consolidating, restructuring, so on and so forth. So I think what was the really focus of Indian corporates?
Isha, you want to go ahead?
Thanks, Amit. Clearly, Indian corporates weren't very acquisitive. They left the playing field to a lot of investors. But some of the big conglomerates have done two things which have turned for them in the last few years. And especially as a big theme that I saw in 2023 was some of the big conglomerates came out with listings from their groups, conglomerates, for the first time after over a decade, and some a decade and a half and 2. So these are blue chip names, the big names which really rings a bell when it comes to goodwill in the IPO market. So whatever little came in the IPO market, so the biggest one was like Tata Tech coming in from Tata Sons, which was a big one, and after 17 years of TCS listing, if I'm not mistaken. JSW Infra was a listing after JSW Energy, after a decade of that. Reliance was not an IPO, but still a new listing offering from the group in Geo Financial Services. So all these three were really big in terms of coming to the market. And remember, these names always have a premium over the other names because we've seen these conglomerates for over 50 years, go through all the cycles. One more point I would like to make is that this is also an inflection point for Indian conglomerates and top corporates of India, because they have been working very patiently on building some businesses. And when it came to a fruition of a scale that they could reach the public market, they really came out with an IPO. Of course, I would like to mention also that Aditya Birla Group, a few 2-3 years back, had its Birla Capital, mutual fund business rolled out, Birla Sun Life Mutual Fund, and Piramal had Piramal Pharma as a mirror listing demerged from the original company. So these two were the offerings from other two conglomerates in the last few years. But last year, I would say, was quite an inflection point. Second, very important, is not many Indian conglomerates have been good with B2C kind of businesses. They have always had a strong hold on capital intensive old economies like cement, steel, and other manufacturing kind of sectors. And they have worked towards scaling their size on digital and new age companies. And it won't be too too far when we see some of these conglomerates being the biggest ones. We've seen Reliance Geo platforms, Reliance Retail with its online presence as well. They've been big. JSW really coming up with their EV business ambitions. So all these, and Tata has its own digital business which they are trying to grow, and Birla, which is considered again more B2B, struggled with its B2C venture of telecom, still struggling right now. They have opened a few other businesses which are B2C in the jewelry business, and now they have also gone into paints. So, but the new age companies also trying to reinvent themselves in the sectors of the future. Energy sector by Reliance Industries in the new age energy and the renewable energy space, again, that catches the attention. So all of these industries of the future are really getting built after one inflection point. So it's a really turn of an event when it comes to the conglomerates of India.
Right.
Well, I think
If
Nisha,
I will, sorry, go on out.
sorry, Mayank, why don't you go? Sorry.
Okay. No, the only thing I was going to add is that I think most of Indian corporates realize that this is India's time, right? So there is just so much focus on growth, capacity building, and third, which Nisha sort of touched upon, diversification. We are starting to see practically every large corporate tell us that, listen, I am in business 1, 2, 3. Tell me the fourth thing that I can build, and nobody has the time to do this organically. Most people will get onto the M&A bandwagon to acquire something and build from there. So the way they are looking at stuff, I think we, at least our expectation at EY is that we expect that to lead to a lot of large corporate buys in this whole diversification theme. And that diversification can be new economy, it can be old economy. It's just that I'm a heavy metals player. How can I now ensure that my risks are just taken away from that business? So JSW go to EV, Adani go to something else. Adani's, build the entire cement business as that, right? Reliance, I've done enough of telecom. What can I do with consumer? Now what can I do with financials and so on? So all of that. So to us, it's growth, diversification, and capacity building.
Right. Amit, you want to supplement that?
I think most of the themes have been captured. I don't think, it is India's time, and people will find ways or would want to find ways of capitalizing.
So I think now let's take some audience questions. I'm sorry if I cannot take a lot of these because of want of time, but at least let me take as many as I can. And I will not put any of you on the spot, so I will just throw the question wide open. And if you wish to pass, we can respond separately. I think the first question is from Freni Patel from Asia Law. Two questions really. I think first is, have regulatory hurdles, say from competition law, impacted M&A scene? She doesn't clarify Indian or not, but let's talk about India. I guess globally, I know for a fact it has. Second is also hostile takeovers continue to face challenges in the Indian M&A market, as seen in the latest case of Mindas wanting to increase stake in Precol, listed entity space. What are your views on that? So I'm throwing it wide open, two questions.
Can I speak about the CCI Competition Commission? And I've tracked it from its inception and how it has grown. It is much better understood now. I remember when it was commissioned, for 6 months, we were waiting to see which company will go first, because that will become an experimental role model, experimental case. So from that time to now, we have come a long way. But like Z Sony deal, it was stuck forever for CCI clearance. That delayed the transaction, and somewhere the strategic intent of that acquisition also got diluted because of the delay in the regulatory clearance. The threshold, there have been some amendments by Competition Commission. The threshold of 2,000 crores is a very low threshold, which has rattled especially the new age companies and all the companies that a small deal like that will have to go for the CCI clearance, which may take up time. So that has created some bit of a dampening of spirit there. But a lot of clarity needs to be brought about from the amendment point of view. There's a lot of discussion that takes place, but it is still a cumbersome process when it comes to the Competition Commission, I would say, and a lot of gray areas with with each of the passing deals, the corporate India and the deal makers and the lawyers are really understanding. You will know better than me on that.
I think very fairly summarized. I do tend to agree with that, Nisha, as a practitioner of M&A. Unless somebody wants to supplement Nisha on this, the second part on the Minda recall and hostile takeover, and still struggling with hostile takeover. So, anybody's take on that?
India is not an easy market for hostile.
Why so? Why do you say so?
Yeah, partly to do with the nature of the shareholding structure in a lot of listed companies, and partly to do with the regulatory environment. I mean, squeezing out shareholders is still a nightmare. Delisting is a nightmare. I mean, so some of those things still they evolve and become more sophisticated. Hostiles is not that easy in India.
Absolutely. That's.
I don't think in the collective wisdom of three of us, we would have seen many in the last 20 years.
We have seen failed attempts, but not successful ones.
I mean, I've been party to failed attempts also, but I haven't closed one yet.
Okay. Wish you luck with that. I think maybe this year you will see one. Next question. This is from Mr. Rajiv Malik, LGE or IG. Now, this is basically information. Is information related to pre and post closing of M&A forms part of trade secret? And can any action be taken against any leakage of data to competitor by an ex-employee who maybe gets hold of the data?
Sorry, I'm not clear of the question. Sorry.
I didn't follow the question either, but Prasenjit, you are the boss of this, right?
You're the
we are remain shut.
Yeah, I think to paraphrase the question, I think they're saying if there's a data leakage while we're negotiating the M&A transaction, there's a data leakage, what happens, what kind of action you bring. Naturally, when you, I think, negotiate a transaction, you will have NDAs in place, confidentiality agreements in place, and that should be ironclad. If you're a disclosing party, you will obviously ensure there are enough checks and balances to ensure that any trade secret, including, I would say, confidential data which is shared as part of due diligence exercise or otherwise, is not misused. Especially if you're talking to a competitor who is a strategic competitor, that competitor may be ill-motivated to really talk and then bail out just to gather some sensitive data. It's not unknown. It's quite common, I would say, for that to happen. So be vigilant and ensure your confidentiality clause has really kind of strong teeth to kind of help you with that. But yeah, I think it's more of a question for me than our panelists. But I think the next one, I think, which is for our panelist, is
just one thing. There's a new SEBI's paper on making insider trading a little more pronounced and putting the onus on the companies. It is still under discussion and created a lot of confusion and rattled a lot of deal makers, and on which I did a lot of research and even asked the committee which had actually recommended those laws, and I asked the chairman of the committee on this as well, on his views why this was even proposed to SEBI. So the thing is, if a speculative news report comes out on a deal, the company has to is required to come out clean on where they stand on that transaction. Now, the deal makers and the companies and the management's view is that it can be too early to disclose your strategy on a transaction. We cannot. But the committee which has recommended to SEBI has stated that if it has come in the market as a speculation, then it is out in the open, and the onus lies on the companies, because there is vested interest involved, and you need to protect the interest of the minority shareholders. So you have to explain where you stand on the deal. So that can cause a lot of confusion. That can be a trouble for the companies because the strategy cannot be revealed too early. But it's still a discussion paper. We'll have to see how it goes.
Honestly,
Very,
if
very,
this put in this context, I know Nisha what you're talking about. If it comes out in this context, Prasanna will have better view. In my mind, I think you'll have 50% drop in M&A. India is a hugely porous market, and you cannot have the company and a listed company coming out and clarifying these things at a early stage in time. So it's a very risky circular. They need to have more checks and balances on that.
there's a classic catch-22. I think many of my clients often, do ask me this: what to do? Should we not? Because it's too early. Sometimes it's rumors, and I think it's a tricky one. Needs more clarity, as Nisha said, that it's evolving and needs more clarity. I would love to take one last question, but I think being mindful on the time, what I would request instead is, my three esteemed panelists to share the two key takeaways, uh, from what they have discussed during this webinar for the benefit of our audience.
Go ahead, Nisha.
So I would say that time for infrastructure has come for the future. I'm just giving you an outlook of what I see for the future. And infra IPOs could make a comeback because the financial institutions and the investors are very keen on that. That's one area that I am looking at very closely. And second, I would say that Indian conglomerates, their animal spirits are going to be back. We'll see many big things coming from there. Birla Group's Novelis IPO overseas is going to be a big one, and many others will showcase their global ambitions, as well as in the next few years, some more offshoots with big bang IPOs coming up and more diversification. And in M&A game, if Indian conglomerates get back to that, then nobody else has a chance. So that competitive intensity is going to increase in the next few years. It's just beginning to turn at the moment.
So I'll
Right.
summarize it to some extent. Nisha has covered it. The next 12 to 24 months, you will see a tremendous competitiveness coming into the market for quality assets. Last few years, it was largely private equity buyout. We've already started seeing Indian conglomerates or Indian corporates head-on competing with private equity buyout funds for buying assets. I wouldn't be surprised over the next 12 months, 24 months, to see international strategics jumping into those. So on the M&A side for large-scaled assets, you will potentially see all the three possible buyers jumping into the M&A bandwagon for acquisitions. And again, for the next 12 to 24 months, unlike the last year, and I can talk about it from my own pipeline, you'll see larger size IPOs. Last year, there were large number of IPOs, but most of it was like $100 million types. But the pipeline for the coming 12 months and beyond, in terms of size, and I'm talking billionish or at least $500 million plus type of IPOs, is increasing.
Right. Thanks, Amit.
Yeah, no, I'll go with three things instead of two. One, it's India's time, so you will see just so much happening, a lot of inbound, both in terms of strategics and private equity. So that clearly watch out for that. Two, I think non-sexy is becoming sexy. Industrials, auto, all that, right? Things which were seen as laggards, really boring. I think, again, given the entire China plus one, Nisha touched upon infrastructure. So some of that is going to be the flavor of the day. And three, just private equity. We spoke about conglomerates, but I think the amount of dry powder, the churn in their portfolio that is coming through over the next 12, 24 months. Again, watch for that space. So, so India inbound, private equity, clearly, I mean, and some of the old fuddy-duddy sectors, they are really going to shine.
Right. So thanks for those excellent takeaways. I think some of you may wonder that we have spoken a lot about 2023. What about 2024? And bit of crystal ball gazing has been done, but there is a specific webinar coming on 17th April on outlook for 2024, and we will talk in much more detail about 2024, how it will pan out. Before we head towards the conclusion, Mitesh or Prajay, if I can request you to put up the poll slide, I will request each of our audience members to really share your feedback on today's webinar. We take it incredibly seriously as a part of our continuous improvement program. We'll give 30 seconds to do this poll, and then I will quickly do the conclusion to wrap this session up. Right then, so you can take off the slides. Yeah, so I think finally, I would like to thank each of our guests for sharing their experiences and expertise with us today. Amit, Mayank, and Nisha, thank you so very much. Without you, obviously, this webinar would not have been possible or as insightful. Each of you did an outstanding job as expected, and we are very much indebted to you. To our audience members, we hope you found this webinar interesting, a worthwhile investment of your time, and certainly you kind of enjoyed this as well. After the webinar, we will, as I mentioned at the outset, send you a copy of this presentation along with the recording and the key takeaway summary note of what was discussed today. You will also separately getting a feedback form on this webinar. Please take a little bit of your time, 30 odd seconds, 1 minute to fill that up. Comments, criticism, even compliments, we take everything seriously. Please don't hesitate to contact us regarding any of these matters discussed in this webinar. Contact details are at the back end of the slide. Thank you very much for your attendance today, and we look forward to your service again in future webinars. Thank you very much.
Thank you, Prasanjit.
Thank you.